Warren Buffett, the world-renowned investor and CEO of Berkshire Hathaway, is often considered one of the greatest investors of all time. He has built a reputation for his investing acumen and his ability to identify undervalued companies and turn them into lucrative investments. In this video, we will delve into Warren Buffett's thoughts on investing, the behavior of people during economic cycles, his worldview, and the life advice he has shared over the years. Warren Buffett's investing philosophy is centered around his belief in the power of compounding, diversification, and passive investing. He believes the good businesses, bought at a reasonable price, will appreciate over time and generate long-term wealth for investors. To maximize the potential for compounding, he suggests holding onto investments for the long term, rather than trying to time the market. Buffett also believes in diversifying one's portfolio across different industries and asset classes to reduce risk. He is a strong advocate of passive investing, which involves buying a diversified portfolio of stocks, such as an index fund, and holding onto it for the long term, rather than trying to beat the market by actively trading individual stocks. This approach is based on the idea that over the long term, the stock market tends to provide a good return, and that it is difficult for individual investors to consistently beat the market by actively trading stocks. Buffett has observed that people tend to exhibit irrational behavior during economic cycles, which can impact stock prices. During economic booms, investors tend to become overly optimistic and push stock prices to higher levels that are not supported by the underlying fundamentals of the companies they represent. Conversely, during economic downturns, investors tend to become overly pessimistic, causing stock prices to fall even though the long-term prospects of the companies may still be good. Buffett believes that this behavior is due to the emotional responses that people have to economic news and events, and that it is important for investors to avoid getting caught up in these emotions. Instead, he encourages investors to focus on the long-term fundamentals of the companies they are investing in, such as earnings, sales, and market position, rather than being swayed by short-term market movements. Warren Buffett's worldview is shaped by his belief in capitalism as a powerful force for creating wealth and improving people's lives. He recognizes, however, that capitalism also has its downsides, such as income inequality and other social problems. To address these issues, he has been a strong advocate for higher taxes on the wealthy, and using the proceeds to fund social programs that benefit society as a whole. Buffett believes that the role of government is to provide a level playing field for businesses and individuals, and to ensure that the benefits of capitalism are widely distributed. He also believes in the importance of personal responsibility and that individuals have a role to play in creating a better world by making ethical and moral choices in their personal and professional lives. One of the key tenets of Warren Buffett's investing philosophy is value investing. Value investing is the process of buying stocks in companies that are undervalued and have the potential to increase in value over time. Buffett looks for companies with a strong brand, a competitive advantage, and a track record of consistent earnings and revenue growth. He also considers factors such as the company's management, market position, and industry trends. Once he has identified a company that meets these criteria, he will carefully analyze its financial statements, including its balance sheet, income statement, and cash flow statement, to determine its intrinsic value. He then compares this intrinsic value to the current market price to determine whether the stock is undervalued and worth buying. Buffett has a long-term perspective when it comes to investing, and is willing to hold on to his investments for years or even decades to allow the compounding of returns to work its magic. He believes that by focusing on value and avoiding emotional or reactive investing, he can achieve consistent long-term returns that outperform the overall market. Warren Buffett is widely known for his philanthropy and commitment to giving back to society. He has pledged to donate the majority of his wealth to philanthropic causes through the Giving Pledge, which he co-founded with Bill and Melinda Gates. He has also made substantial donations to various organizations, including the Bill and Melinda Gates Foundation, which focuses on global health and education initiatives, and the Susan Thompson Buffett Foundation, which supports reproductive health and education initiatives. In addition to his charitable giving, Buffett also encourages other wealthy individuals to be more involved in philanthropy, arguing that it is not enough to simply accumulate wealth. He believes that those with the resources to do so have a responsibility to give back to society and make a positive impact. Warren Buffett is widely regarded as one of the greatest investors of all time, and has mentored many successful investors and business people over the years. He has been a strong advocate for the importance of mentorship, recognizing having a mentor can be a valuable resource for anyone looking to succeed in life. Through his mentorship, he has taught many of his protégés. His investment philosophy, including his approach to value investing, his perspective on the stock market, and his insights on how to build wealth and make smart financial decisions. He has also been a strong advocate for the importance of continuous learning and staying current with the latest investment trends and techniques. Warren Buffett's approach to investing is characterized by his strong focus on patience and discipline. He believes that one of the keys to successful investing is avoiding the temptation to make impulsive decisions based on short-term events or emotions, and instead taking a long-term perspective and focusing on the fundamentals of the companies you invest in. He emphasizes the importance of avoiding the emotional ups and downs of the market and focusing on the underlying value of the companies you are investing in. In terms of portfolio management, Buffett is known for avoiding frequent trades and instead focusing on building a well-diversified portfolio of high-quality stocks that he can hold on to for many years. He avoids trendy or speculative investments and instead focuses on steady, reliable companies with strong track records and solid financials. While Warren Buffett is widely regarded as a successful and aggressive investor, he is also known for his risk-averse approach to investing. He believes that risk management is key to achieving long-term success, and that investors should focus on limiting their exposure to unnecessary risks. One of the ways that Buffett manages risk is by diversifying his portfolio. He believes that a well-diversified portfolio reduces the risk of large losses in any one specific investment and allows for more consistent returns over time. He also avoids investing in industries that he does not fully understand and instead focuses on industries and companies that he has extensive knowledge of and can thoroughly analyze. Warren Buffett is widely known for his integrity and ethical approach to business and investing. He has a reputation for being honest and transparent and for putting the interests of his shareholders first. He has also been a strong advocate for ethical business practices and has been critical of companies that engage in unethical or deceptive behavior. Buffett's commitment to integrity and ethics is reflected in his approach to investing, where he looks for companies with a strong reputation, a commitment to ethical business practices, and a track record of transparency and honesty. He also emphasizes the importance of treating employees and customers with respect and fairness, and of conducting business with integrity and ethical standards. Warren Buffett's worldview is also shaped by his approach to investing. He believes in the power of capitalism to drive economic growth and improve the lives of people around the world. He also recognizes that there are inherent flaws in the capitalist system, and that it is important to regulate markets to prevent abuses and ensure that the system is fair for everyone. In addition to his insights on investing and economics, Warren Buffett has shared valuable life advice over the years. He emphasizes the importance of having a positive attitude, building strong relationships, and maintaining a strong work ethic. He also encourages people to focus on their strengths and to continue learning throughout their lives. Buffett also stresses the importance of avoiding debt as much as possible, as it can limit one's ability to make financial decisions and investments. He suggests that people should live below their means and save for the future, rather than trying to live beyond their means and incurring debt. Overall, Buffett's life advice is centered around the idea of taking personal responsibility for one's life, building wealth through hard work and smart investments, and making ethical and moral choices that benefit both the individual and society as a whole. And with that being said, it's time to end our video. Subscribe to the channel for more amazing videos like this. We'll see you with another interesting video.